Hello friends, welcome back for Bitcoin Technical Analysis. I'm your pal Rocky Outcrop. What have we got behind me? That's the 24-hour Bitstamp chart. What is the current price? Well, it is currently 7,650 or so, and we've been in and around this level for the last wee while, kind of asking a couple of different questions, and we'll take a look at all the details in just a second here. So I'm Rocky Outcrop, I'm your pal. We're all Rocky Outcropticians together here on the channel. Welcome to the channel. If this is your first time joining us, then hit that subscribe button because we do daily technical technical analysis. Right, so you can see that we've made a higher high here on the price action. That's good, and remains bullish. You know, we had a lower high coming in here before, and it looked like could we be going into a consolidation phase. Maybe we could have painted on different things on here at this point had we come down towards this area and had a head and shoulders, for instance. But you know what we've got here is a higher high, and that's negated that for now. So that's interesting. Where are we? We're above the 21. This is this yellow line here, the 21 EMA, and of course you can change that to various different ones, like the 18. In fact, that's the 18 at the minute. That's what Peter Brandt uses. We normally use the 21. Either way, we're above them both. And that's good to see in terms of the price action. Kind of looking quite up, like we're getting fairly close up here towards the 200 simple, which is a common place for the prices to go and test, you know, so that gives you a bit of a bullish target to have in mind, and that's great. We're above the 50 simple over here, and that's also good. And a few things that we know just in general, for instance, is if you measure here over to the right and go 50 bars over, then it takes you to just the 1st of May, which is coming up right now, very soon. And this price action here with the 50 simple includes, currently inside this blue box, it includes price action where we had this big drop down. And then from this point onwards, we'll be looking at having price action where we've come up a significant amount, you know, every time. So every week, the 50 simple will have had a 10% boost or so in terms of where its position is, and we can look towards having a golden cross between these two moving averages here at some point. You know, the 200 there and the 50 simple, that red dotted line, could cross over at some point, and that would be a bullish thing and be great and all the rest of it. So that's kind of like your bullish sort of scenario in the meantime, just how things are going along. Another sort of semi bullish type thing you could try and suggest is that because the volume's diminishing, that, you know, things are contracting in terms of the amount of people are willing to spend or sell, and you know, there's less buyers and sellers at this price, which could be conceivably said to say like that, you know, that the bears would rather be selling it up there at those 10,000 price levels rather than just here. But generally speaking, the school of thinking on those sorts of things is actually that's kind of a bearish thing. Really, if the prices are dropping off, as we can see here on the volume, then that's not so great as you're doing this overall upward movement. So that's a kind of a bit of a bearish thing. And as we see, the volume's actually just been decreasing the entire time. I'm going to put this on linear just for a second now, and discuss this volume for just a second more and say, look, you know, throughout this entire time that we've been going up here, overall we've got this overall downward slope, right? And that's how that looks. Now if I change this button and hit log, then you can see how radically different the line looks just when you change the scaling of things and how it works. And the same thing applies over here with this sort of channel. Now I have a channel drawn on the charts to show where the prices have been, and I've deliberately chosen to use these two trend lines, sort of, I call them chopsticks, rather than an actual parallel channel, because it's kind of an interesting thing to point out that, you know, if you just draw this in by sort of roughly by eye, and you come along here, in fact, like, you know, you take off all this and you come along, you're looking at a clean chart, and you think to yourself, oh hey, this looks like a channel, and you draw that in and say you use a parallel channel, an actual parallel channel tool here, and you do something like that, then, you know, you end up with a channel. That's all great, and but then as soon as you go between logarithmic and linear, the channel's position and the charts will change, you know, slightly, and the price action in relation to it will change slightly, but overall it still remains as a parallel channel. And the point is that I've been making recently, I go back, is that if you just draw these in with the chopsticks and you kind of say, yeah, this looks like a channel, and then you go between logarithmic and linear, then actually, depending on how you've drawn them in, and there's probably, you're not going to be 100% parallel with your lines, but it kind of looks like it, and it's the same psychology that would lead you to do an either or. And then suddenly, you've got something that's more wedgy looking, and it's just to be bearing in mind that, of course, if this were a rising wedge of sorts, and you sort of exaggerated a little bit by making it even more clear there, then what could you be looking at? Well, you could be coming up towards some point where eventually you would maybe get a breakout on this thing, and of course, the bulls would be looking at it and saying that despite the fact that it's a rising wedge, that we're going to go up here past these levels of, say, the 8,000. We'll break up above them. That'll be a very bullish thing. We'll do that hopefully without any sort of divergence on the go and all the rest of it, and fill in the CME gap that goes from 8,000 or so to 9,000, and just have this rapid rise up during the halving and everything else or whatever. That's what they might say. And then other people might look at it and say, well, that's a rising wedge, and they tend to break towards the downside. And whenever the halving comes along, there'll be increased selling pressure from people who need to sort of maintain their cost basis, and there's less money from them available to do it, so they would sell more of their supply, blah blah blah, and you might look towards it going down. That's just ignoring the fact that the world itself is a bit mushy in terms of the technical analysis right now. And if we kind of go over just to sort of put that again, I suppose, in a bit of context, you can see that there's similar sorts of concepts you could have over here in terms of, is the Dow in a big wedge that's going up, and are we going to see this capitulate back down again, resisted by the 50 simple moving average under death cross conditions on the 24-hour, while the world's under a global pandemic and oil prices are completely, have been screwed recently, and the world just isn't operating as it should be, etc., 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 in order to have economic growth. You could say all of that, and then you'd be looking towards where could you possibly see a turnaround at, and so they've got bullish and bearish things on the go, of course. And looking just within this wedge, we've got 3 touches going along the bottom of it, you could say. We've got 2 touches along the top. Maybe we're waiting for that 3rd touch along the top before you even make another decision, and of course that takes you all the way up to 8,200 potentially or so. So there's bullish net and bearish things going on here overall. While the price action puts in higher highs and higher lows, and you can say, hey, we're in an uptrend and remain bullish. But if you look out to the bigger sort of term time frames, like say the monthly, for example, then you can say, look, hey, this is just a downtrend, do high, low, lower high, and we're on the way to potentially putting in lower lows or something like that. So there's depends on your time frame of all of that. Now, okay, what else is there then in terms of the bullish scenario? You've got this downward sloping trend line here. This guy, woo, and you can see that we've got this lead-in phase here where we've got a few touches on this trend line. Then it comes down, and we can see that the price comes all the way up here and then bumps off of it and comes down again, then bumps into it again, and then comes down and retests the trend line, and then actually runs towards the upside afterwards, and that would be that bump and run reversal pattern. Now, people have been talking about these things in the past, and it's just essentially these things. This isn't a bump and run reversal pattern from the classical sense. It doesn't apply to what the textbooks actually say, because we don't have that increase in volume quite yet. It's not really happened, but people were talking about it using different sort of scaling and stuff like that to fit it in back. So on linear, for instance, this is a point I was making before. On linear, they were saying things like this is the bump and run here, and that just doesn't make sense. And that's what people were saying back in March and stuff as well, back towards these other areas, where it still makes even less sense in terms of the bump and run. We're only at the point now where you could actually say that it makes sense. And so like for the best will in the world to everybody else, who's been looking at this pattern, and absolutely fine to do so, then let's just see if there's an increase in volume just to go along with it. You'd want to see that, and that would be all right. But we've got these difficult areas for the prices to negotiate beforehand anyway, and the potential for 10% moves easily towards the up and the downside as you sort of consider them. And in the sort of shorter term, in terms of just purely looking at the charts of the price action on them, we want to see the prices stay above 7,450 or so before, and that would be good. If they did drop down below 7,450, you're looking towards 7,200. Could we get a higher low in there? Technically, though, you'd still be fair enough to be making a higher low all the way down, say, for instance, back down to that 6,850 area that we know has been so crucial in the past, and that could operate as a sort of during this sort of scary, is it a fake out, is it a breakout phase of this channel, or or indeed wedge. And bearing in mind that it doesn't take much of a subjective sort of twisty turny around to turn things back into saying, yeah, we didn't really do anything special there. We just kind of had a fake out of this channel, and we're back into it again. There, you could look at different things like that at the time, depending on how it all shakes out. So what else left is there for us to really look at, and we can look towards the oscillators down below and say, are any of them divergent or whatever? And looking at the stochastics here, you can see there's a peak here and there's a peak coming in here just now, and going back up to the price action, you can see that relates to this peak here and this peak here, which is the current local high potentially and the previous local high. And you can see then between these 2 points, RSI is not divergent currently. Should we sit in this as a local high and then go down a little bit in terms of making a higher low and whatever else, that'd all be fine. It would be doing it without any divergence. The stochastics, on the other hand, would have that, would have bearish divergence, classic bearish divergence there, class A. And the DMI, well, it wouldn't actually between these two peaks here on the DM positive. And, we do have this potential for this to come up here and actually start to trend towards the upside. So that would be good if we could maintain prices up there above that 8,000. But obviously, things could become fairly extended, and you'd have a little bit of a correction just to sort of get these oscillators to reset a little bit, and that along the way. Of course you do. It's just sort of standard. Then what about the MACD though? Then the MACD, well, it's got this downward slope on here, and you can see that it's been sort of bearishly divergent between these highs. Now that's just a warning sign. It's a warning sign for us, and the warning sign comes into play kind of really in a sense that if you look towards breaking these levels to the downside, then you could, and especially actually the 6,850 area, then you could potentially put yourself into a bearish stance for a wee while, looking for further downside targets. And just sort of quick way of finding some of those, just as a quick way of doing it. Not going to put any massive stock in this at the minute or whatever, but breaking down below 7,000 currently would be the 236 retrace from body to body on this particular upward movement. So 7,000 becomes fairly crucial in that sense, and then a 382 where you could see a turnaround comes in at 6,000 sort of 600 area again, where the 50 simple would be at that around about that time. That could all kind of happen. And that could still remain fairly. You could, if so long as you came back up, as long as prices come back up above 7,000 again thereafter in the sort of shorter term period, you could still remain quite bullish on things overall. But you could see all that happening. And why am I talking about that so much? Well, because it doesn't take very much to say that your prices could go up to 8,000. It doesn't take very much. It doesn't take very much to say that any divergence is just warning signs. It doesn't take much to say that just in terms of just sheer price action that we've got a sort of overall upward trend happening on the daily time frame, and that you could look towards these prices for profit taking targets. But just to sort of put it all in a context one last time, about where we are right now, the prices have been great, everything's been going along well, but would you be particularly foolish at the minute sort of taking profits in around these areas, as you see that we're at the median line of a channel just having broken? That's wrong. That channel's wrong. You see, it just doesn't. 1 second. I mean, that's a bit better. Yeah, so anyway, it's just kind of around about this median line of this. Would it be foolish in a sense to be taking profits if you were in around these areas, or perhaps would it be highly risky taking shorts around this area or whatever? Well, there's unlimited risk in trading at any given time. So and I'm not a financial advisor, none of this financial advice, but I do find that the way to mitigate risk easiest is to choose areas where you feel are inflection points in the market that you can manage your risk around, and kind of sustaining the prices up above the 7,600 area where the 50% retrace is, and actually maintaining it above that would be positive, and we could look towards that 6,000 area or so, but that could give you a risk management sort of target for shorts or longs really, but then sort of the where you could easily anticipate sort of turnarounds or support coming in at just in the short term would be that 7,400. We do see that we're right at this area as well of previous resistance, and where we could operate in various different areas, and the 21 is right at that 7,200 area where we could easily come down to there in terms of higher lows and whatnot. So there's and all of that represents big price movements. You know, big price movements like 5.5% there is more than enough of a move to be able to be profitable and have it and justify taking trades off the back of it. So what's my general overall sort of feeling on this currently is that there's trades to be made in either direction, potentially justifiable trades that you could make, and you know, you're welcome to do so if that's your inclination. Either direction really overall, but there's you can see that we've made a high here on the 4 hour, just where we're consolidating really currently, and that is not divergent, you know, across the RSI, the MACD, and the DMI. It is on the stochastics as it happens, but you know, we're right in this area and we're consolidating. So we're consolidating when mostly we're not in divergence situation. We've kind of come down close to 21 on the 4 hour and we're above that. Could we see another move up here towards the upper end of the channel for like sort of the high in the 4 hour time frame to come in then and actually, you know, before making another one we could do, you know. So again, though, I wouldn't get too carried away about things up with the prices if they do come up towards this 8,295 area in the next few days, because you'd have to, well, we would get excited. What I'd be looking at would be how the dynamics of how it operates in this region here where there's a gap on the charts previously. And I would like to point out that at the current prices for Bitcoin, there'd be a gap towards the downside, so you could see some sort of downward price pressure if the prices actually sustain themselves where they are right now, but come sort of tonight. So I'd look out for that potential sort of re-upping or managing your longs or managing your entries or exits or whatever. If there were a gap there, potentially we could see some sort of volatility on the charts if that prices remain where they are. Of course, if the prices go down again, it's only a couple $100 to go down to that next level where this horizontal blue line is at 7,450. You know, 200 bucks down from where we are just now, and you're asking questions again, you know, below the 21 on the 4 hour, below this horizontal line, the 4 hour, we've put in a high, we could put in another high or low, and you could be looking down again. So, you know, like those are the conditions, and you can choose your trades based off the back of that. Hopefully that helps give a bit of context for sort of both the up and downside currently. Overall, we're just consolidating on the 4 hour time frame for a while, which is okay. Could we see the prices turn around at the 50%? We could. Could we see them go towards the golden pocket? We could. What else is there? The 200 simple on the daily time frame. You know, there's equal cases to be made on either side right now if you want to make them. Just manage your risk accordingly. Right. Thanks for tuning in. Be aware that there's a Bybit giveaway. We're giving away you know, a bonus there on Bybit if you join up. So the first 5 people that join up and all the rest of it get $10 accredited to their account. And you also, whenever you make a deposit, you get an extra deposit because you're a Rocky Outcroptician, because I negotiated a unique deal with them for us as a community. And also I've got a Discord just started, so I invite you all to join that and say hello to me in there, and we'll try and grow a community of people that will share ideas and stuff like that with each other along sort of similar vein. And yeah, so great. Thanks so much for tuning in. I'll catch you in the next episode.